All right, everybody. Stocks by the numbers. Welcome back. And I wanted to do a quick update here. I know markets just closed. It's Friday. Everyone's getting ready for the weekend. But I just wanted to bring something to your attention that I recently mentioned. I might have mentioned it on X. I don't remember, but mentioned it in the Discord a little bit, gave my reasoning. So I just wanted to do a quick video and just lay out what's going on. So the company I'm looking at here is Hershey. Ticker symbol HSY, listed here on the New York Stock Exchange. Stock today dipped below 186, down a little over 1.5 points, almost 1% on the day. After hours, up about a dime. But basically what's going on is this. First of all, whoa, I almost broke something. First of all, you can see that Hershey, as of late, has been very volatile. And the reason why, I think, in my eyes, is that every time we have a run up, we always get these new reports and these new analysts coming out and just kind of adjusting their price target. Everyone's looking at the price of cocoa that kind of really started to rocket over the last year or two. And they're kind of course, tying that into Hershey, since this is predominantly a chocolate company. And they're saying, hey, listen, cocoa is up, so they might have to raise their prices. If they don't, it's going to start to hurt their margins. So we're lowering our price targets, or we're keeping Hershey at a, like a sell rating, a hold rating, because we don't think we're going to see a big breakout. And it's unfortunate because, in my opinion, the company overall is a solid company. Obviously, you guys are familiar with the name. They've been around, I don't even know, 100 years, more than that. They steadily pay you a dividend. They've been increasing it over the years. And up until right here, which was basically mid 23, the stock for the most part was on the up and up. So I'm looking at this a couple of different ways. First of all, for the long term, in my opinion, the stock probably should be fine, because whether the economy is good, bad, or ugly, chances are people are going to, still indulge in their snacks, and they're going to grab their Hershey bars and their little snacks and whatnot. But even in the short term, we have an interesting play setting up, because obviously if you look at your calendar, you can see we're in about the second week of October. And inside of the next 2 to 3 weeks, we have Halloween coming up, where of course there's going to be big candy purchases across the board to give out to the kids. And then after that, you have maybe any potential little bags or gifts of candy that may be given to family members for the Thanksgiving holiday. And then of course you have the big one with Christmas. So right now, going into that holiday season, in my opinion, something like Hershey is a pretty good timed buy. The problem is, I've been watching it for the last couple of days, and I'm going to zoom in here, and you can see, look, we broke this support trend line on the 7th, and the stock has essentially been flat for almost 4 days now. So we were kind of channeling along, and then we had the breakdown today. And this is why I wanted to bring it to your attention, because this bottom support trend line, which is basically where I called out Hershey calls in the past in the Discord. And you can see we've come down, we pulled back to the support, the very low, excuse me, the very low 180 level. And then boom, we had a rocket back to 100. Then they slowly bring it down, break it down through these support levels. Look, flattening out along this bottom support trend line. Again, low 180s. And then boom, they rally it back to 200. A little bit of a sell-off, rebounds back above 200, and they slowly start to sell it off and bring it back down to the trend line. So, of course, we don't know exactly what's going to happen. But in my eyes here, pulling back to this bottom support trend line and maybe testing this fib right here. There's a 1-year chart, by the way. Potentially retesting this 0.68 fib of 183.13. This is why I'm saying, in my opinion, I kind of put everyone on alert, because even though, yes, it can pull back roughly 3 points from here and retest this level, if you're able to begin to build a position and accumulate shares, or maybe buy some calls with a couple of months' time, even if it does have a pullback, as we know, if we liked it up here, we like it a little more down here. So you may be able to add to the calls, average down maybe on the cost a little bit, and then kind of just ride that rebound over the next month or two. So in my opinion, something in theory like Hershey seems like a very good play over the next couple of months. So that's why I wanted to do this update in the numbers and in the technicals. In my opinion, I do think it looks like it's ready to rebound a little bit. And of course, as I said, with the holidays coming up, it probably isn't the worst play, but 37.6 billion market cap. We have a dividend now yielding a touch below 3%. We're trading about 20 times earnings, which in this market is pretty cheap. But I do understand they're tying it to the rise in cocoa. The EPS has been very solid, minus last quarter. We had a miss, but we've beaten 3 of the last 4 quarters. And we can see annually, coming out of those lockdowns, the revenue has been growing very nicely. We were sitting here around 8 billion. Then coming out of 2020, you can see up to almost 9 billion, above 10 billion, above 11 billion. So I understand last quarter was a pretty big miss on the top and bottom line for Hershey. But again, now we're coming out of the summer months here, and we're going into the holiday season where people may be giving a little bit more chocolate and candy out across the board. So this is why this one is in my crosshair. But overall, the company isn't really trading too high of a multiple. And if we look at the numbers real quick, we can see the one concerning thing is actually that the debt has increased slightly. And we can see we were back here at like 5.1, 5.2 billion. Now we jumped up to about 5.7 billion. However, the company really hasn't raised too many red flags, minus the last quarter's earnings beat, in my opinion. And the dividend, as you see, consistently gets increased. And now we're up to almost $4.50 a share. So even though the debt has been increasing, we can also see, though, this is Q2 of 24, and if we compare it to Q2 of 23, we can see the debt is up, but look at the free cash flow here in the center, 195 million. This time last year, 140. They had sub 450 million cash on hand this time last year. Now we're up to 467 million. So I understand the cash on hand may be because they took out a little bit more debt, but we also know that the free cash flow increasing year over year is a very good sign. The short-term liabilities are slightly outweighing the short-term assets by about 1/10 of a billion, but of course in the long term, basically 2 to 1. If we come over here, we can see we did technically have our first dip in equity for the first time in a while. And we can see that we rose from 3.25 billion up to about 4.1 billion. Now we pulled back to 4.01 billion. Technically, yes, not a good thing. However, we know that sometimes, even if you look at companies like Amazon over the years, as we mentioned, you have these little ebbs and flows when it comes to some of these fundamentals. But this is why, again, I say that if the more money you have, really, in theory, the easier it should be, because you have the option to buy the shares as opposed to trying to time an option. Or even if you want to do options, you're able to buy, 6 months out, 1 year out if you want to, as opposed to someone who maybe has like $200-300 and they have to buy, a week out, 2 weeks out. So they don't have that time advantage that you have. So this is why I'm kind of laying it out more for the longer term. But again, if we come down and hit that 183-ish bottom, and you smaller traders out there are able to step in with whatever, $100-200, and you're able to buy some calls maybe for a couple of weeks out, you may be able to catch that rebound and see some decent returns as well. And a past performance doesn't dictate future results, but I will say, usually, when I mention a play on Hershey, it does happen to turn out correctly. So this is one that I have some decent success with. But let's look at the numbers. So 5.76 billion in debt now, right? The equity 4 billion. So if we subtract, that would bring us to minus like 1.3 billion. If we come over back to the cash, we're at 467. So that brings us to what? Minus like 800 million or something. So now we have to come over and look at the numbers, and we can see we did over 11 million. So that would bring us to like 10.3 billion. And they had profits of 1.86 billion. So that would bring us to, like 11.5, maybe 12 billion or something in change. And right now the market cap is about 37 billion. So the quote unquote fair value of the business in my eyes is about 11-ish, 12 billion. Right now market cap down to 37. So we're only trading roughly 3 times quote unquote fair value. And only a little over 3 times last year's revenue. So in my opinion, because of the type of company it is, and because, of course, markets just continue to climb and hit these new highs, I'm really not seeing a lot of reasons why Hershey should be down. And simply the argument of, well, cocoa prices have gone up. Yes, I understand the argument, and the stock may not run back up to 260, 270. However, as we've seen, getting back up to 205, 206, 210, 212 really shouldn't be an issue, in my opinion, over the next couple of holiday months. If we look at some of the recent news, you can see they've been kind of quiet and kind of been beating it up a little bit. Citigroup adjusts price target on Hershey to 181 from 182. Okay, didn't even need to say it, but maintains sell rating. Very interesting. We can see also price targets ranging from 163 still up to 232. Bernstein downgrades Hershey to market perform from outperform. Well, again, even though technically that is a downgrade, remember the market's performing very well. So even if Hershey, performs with the market and doesn't outperform the market, that's still not too bad of returns. But adjust price target to 205 from 230. So obviously this was one of our higher price target analysts out there, well above 200. But even pulling back the price target to 205 is still, 10, 12% higher than the current stock price. Increases yet falls behind markets. Let's see what this says. No disrespect to them, but it's a Zacks article. They go on and on. I can't. Hershey seen facing, quote, challenging demand backdrop in 2025. Hershey is likely to face continued input cost pressures and a, quote, challenging demand environment in 25. I don't know if the demand will be challenging. Again, I still say they're tying it to the increase in cocoa prices. Brokerage expects the company's 25 earnings to be down 7% year over year to $8.80 a share, which it said is 5% below consensus. Quote, the primary driver for our downgrade centers on a view that street estimates for 25 look particularly optimistic given continued input cost pressures, namely cocoa, coupled with a demand backdrop that remains uncertain/challenging. Quote, until visibility improves on the top and bottom line trajectory over the next 12 to 18 months, we move to the sidelines and expect shares to remain largely range bound. Right? So this is kind of what we've been seeing actually over the last 12 to 18 months. As we mentioned, we kind of dipped down into those like 178s, those 181s, and then we bounce up to above 200. And then we sell back off to 180, and then we bounce back to 200, right? So right now, the stock is range bound. And what this analyst is saying is that over the next 12 to 18 months, we think everything's kind of going to remain the same, and you're just going to see like these tight little ups and downs in Hershey, and you're probably not going to see a big break up or a big breakdown. Now remember, if you're buying options, something like that will be very hard to time, and in my opinion, if you are going to trade something like Hershey, in and out, right? When you get the profits, in my eyes, secure it, and even if it runs away and you could have made more money, just remember, the goal is to secure profits, increase buying power, and if you want, you can always re-enter the position. But UBS said it does not see a return to earnings per share growth for the company until 2026, adding that the firm's internal revenue growth model, ability to set prices, and emphasis on cost reduction will enable it to achieve a 6 to 8% adjusted EPS growth longer term. The current inflationary phase for Hershey is expected to constrain the firm's capacity to meet its growth projections beyond 2025, potentially leading to a consecutive year of EPS decreases, according to the note. UPS downgrading its rating to neutral from buy and lowered its price target to 209 from 226. So still very bullish. Again, still maintaining above 9, but again, they're basically saying, yeah, it could run up to above 200, but then it's going to sell off again, and then it could bounce, but then it'll sell off again. So that's basically what they're saying here. What's very interesting to me is all of these price target adjustments and new analyses that have been brought to our attention on HSY all come within the last couple of days, are all coming around the middle of October, and as we said in the beginning of the video, are now all miraculously coming out right as we're going into one of the biggest candy holidays ever. And of course, you have Christmas a couple of months down the road. So this is why I always say, similar to what we just saw with SoundHound, with what Jim Cramer said, right? It's extremely tightening in the chart. It's ready to break up or down. It's been quiet for months, right? Everyone's waiting for the pop. All of a sudden, Kramer comes out, tries to bash the company, tries to convince people it's a meme stock. And then what happened? Yesterday, I believe it had a nice pop and it got up above $5. And even today, I think it closed above a top resistance trend line. So immediately, right after this guy tries to bash the stock, all of a sudden it looks like we may have a potential bullish breakout on our hands. And everything that guy just said was bullshit, right? Shout out to those who watched My Cousin Vinny. That's a great line. But I just find it interesting that just over the last couple of days, as even the average investor, again, I'm not trying to bash you guys because I know I have a little experience in the industry, but again, some self-taught traders and investors out there may know more than I do. But, when we talk about the average investors, again, we're talking about just the average person on a YouTube video, the average person with an investing account. And what I'm noticing is that a bunch of you reached out and mentioned Hershey on your own. So again, this is what's very interesting about the mentality of the market and the average investor. You all kind of saw the writing on the wall. And you took a step back and you said, okay, what could be good over the next couple of months? We're in October. Oh, wait, we have Halloween, Thanksgiving, Christmas coming up, or Hanukkah, whatever you celebrate. But we know that something like chocolate is a good gift that everyone pretty much appreciates. And even though it went up a little bit in price and it's a little more costly than it used to be, it's still actually kind of a cheaper gift. And even something like a nice little chocolate collection box or something, as we say, it's the thought that counts, and pretty much everyone appreciates chocolate. So it's funny that the average person like yourself looked at the calendar, put two and two together, and felt that Hershey would be a decent buy over the next couple of months, right? And at the same time, all of a sudden, everyone's kind of trying to trash it and trying to lower their price targets. So this is why sometimes you have to read between the lines. And I know it's very hard to do because it may not make a lot of logical sense, right, in the black and white of it. But this is why, unfortunately, a lot of the market is in the gray area. And I'm not going to lie, I personally struggle, even throughout life, trying to see things in the gray area. Because the way my mind works, as you can tell, I'm very analytical, I overanalyze, and I like things to be black and white. So when you tell me there's a lot of crap in the gray area, sometimes it's hard for me to grasp that concept. But I'm just trying to show you that, again, the average person sees that Hershey could be a buy, yet at the same time, we're coming out and bashing the company over the last day or two. Hershey faces downside risk to 2025 street forecast amid cocoa inflation. See challenging demand backdrop. Cut to neutral from buy by UBS. UBS, yep. Bernstein. Cut to underperform from hold by Jefferies. Price target 163 from 184. That would need the stock to break that long-term support trend line. Keep that in mind as well. Hershey down 8 consecutive days. Price target cut to 197 from 203. Maintained equal weight at Barclays. Price target cut from 204 to 202. Hershey cuts jobs. Okay, that didn't give us... Oh, here we go. Laid off a small number of employees due to record high cocoa prices. Again, remember, technically, something like that is out of Hershey's control. We have to keep that in mind as well. Impacted less than 1% of about 20,000 workers. So that's roughly, less than 1%. So we're talking less than 200 people potentially being laid off. Honestly, compared to what a lot of other businesses have been doing, that's really not a lot of people. According to the report, Hershey's productivity initiative that came earlier this year aimed to generate $300 million in savings by 2026, along with improving supply chain and manufacturing-related spending. Reuters said the company has also signaled that it will have to raise prices again to offset increasing cocoa costs due to a bean disease in Africa. Again, that is unfortunately out of their control. Hershey didn't immediately respond. Yeah, what are they going to say? You know? I mean, remember, a lot of these men and women who are on the boards can't really say what's going on and or what they really want to say, right? So technically they should come out and say, yeah, this freaking sucks and it's out of our control. What the hell are you going to do, right? But that's not necessarily a good answer that would be accepted by investors. But of course, we know that's probably what they're thinking. Like, yeah, cocoa's up. What the hell you want me to do? We still need it to make our chocolate. It is what it is. We're cutting jobs. Okay. CEO sells 5 million. Okay. Lawsuit. What is this? Hershey Report asked a judge to dismiss a lawsuit alleging it misled consumers about Reese's peanut butter candies. How do you mislead someone with candy? Criticized class action litigation as baseless, targeting issues related to product packaging. Consumers suing Hershey expressed disappointment over the lack of details on 9 Reese's products, including pumpkin-shaped candies missing eyes and crooked mouths, and a football-shaped candy resembling an egg due to missing stitching. Are we serious right now? Are we serious? With all due respect, I don't think you have a big claim to fame here by saying, oh, you're trying to sell me a football-shaped peanut butter cup, but it looks more like an egg. That, that is more of, I don't even know what to categorize it as, right? That's like a disappointment. You know what? On the back of the packaging of all these products, it says, oh, do you have any questions or concerns? Call this 800 number, right? That's what that number is for. Yeah, I just bought one of your products, and you said it's shaped like this, it looks like this, I'm very upset. And who knows, they might ask for your address, they might mail you a couple of coupons to save a few bucks off of some bags of chocolate moving forward or something, A lot of people forget that. The power of the pen. That's what people used to do many, many decades ago before everything went digital and everything went online. See, a consumer... excuse me, a customer concern, something like this, people used to write out letters or type up letters, and they would actually send them to the company and say, hey, listen, I'm a loyal customer, I like what you guys do, but these are my concerns, you dropped the ball, I'm very upset. And the company would usually reach out and try to make it better for you in some way, shape, or form to try to keep the customer base happy. So filing a lawsuit on something like this, in my opinion, I just don't understand. This has no foundation, if you will. The report quoted Hershey saying, quote, this lawsuit is yet another in a growing trend of baseless class actions, agreed, founded on nothing but a consumer's selective, subjective, and result-driven interpretation of one isolated aspect of a product's packaging without considering its full context. Believe it or not, I agree with Hershey here. Quote, not a single plaintiff claims the product was unfit for consumption, right? Again, that's something entirely different. Or was anything other than what customers have come to love and expect from this iconic brand delicious treat. Exactly. So what they're saying is it was the same exact product, but of course, yeah, if it was out of shape, if whatever, they used the wrong mold or something slightly, I mean, yeah, that technically is a mistake, but it doesn't warrant a lawsuit, in my opinion. Now, if these people bought these new products and filed a lawsuit and said, oh yeah, these taste really funny, it tastes like bleach when I'm eating it. I had a serious stomach ache for like 3 days after I ate one. I had to be rushed to the hospital. Right? Now we're talking about something completely freaking different. And the company will probably, if that situation took place, hypothetically, the company would probably try to settle that out of court for at least a couple of $1 million. Hands down. But yeah, something like this, oh, it's shaped differently or something, that does not warrant a lawsuit. So I have to side with Hershey here. Notably, suing Hershey are seeking at least $5 million in damages? Are you kidding me? For a football-shaped piece of chocolate that looks like an egg, you're looking for $5 million? I'm telling you, this is getting out of control, man. I'm going to have to hire a lawyer. I'm just going to start suing everybody. Are you kidding? Yep. Yep. EPS down, sales down. Here's an ETF. Okay, good. So that's basically all the recent news that's been coming out on Hershey. And as we always say, it's very interesting how when we see something that lines up, something that makes sense, something that probably is a decent discount buy that could make you a nice return, all of a sudden, people start coming out. They start bashing it. Oh yeah, the company got a lawsuit. Oh yeah, we're downgrading it to underperform. Price target's now 185 instead of 205. All of a sudden they're bashing it, right? And it's funny because it usually 9 times out of 10, I'm telling you right now, this is a situation where you turn around in like 2 months and we go to like the middle of December and the stock may be back above 200. Right? And then all of a sudden, all of those analysts now have to come out and say, oh yeah, we're up and it's outperformed now, and our price target is 220, not 202, right? Now all of a sudden everyone's bullish on it because they were wrong and the stock's been climbing. So this is why, as I always say, sometimes you got to take a step back. You have to see the writing on the wall. However, it really did stop raging, and it has been pretty quiet, as you see, over about the last year or so. So even if you feel this could be a good trade or a good investment, but maybe it's not something that's up your alley, that's understandable. But again, we know this is a brand name company that's been around a while, and we've had decent success with trades in the past. So I figured I'd do an update video because I know, again, the average investor is talking about it, which means, again, they bring it down usually before they bring it up. That's what you're seeing over the last week or so. And now all of a sudden we're getting negative reports, which indicates to me they may bring it down to screw over the early investors that bought it a week or two ago. And then they probably will bounce it and start to climb it back up to 190 and 200. So in my opinion, that's basically what can be happening here over the next couple of months with Hershey. And if we look here, you can see we've been trending downward, right? We can break to the bottom Bollinger Band, 184.32. That fib level and support line was at about 183. The MACD has been steadily slipping downward. Look at the RSI, though, now 33.5, approaching that 30 benchmark. Last time we hit the 30 benchmark, we had a nice bounce. And if you notice, as soon as we hit the 70 benchmark, we started to sell off. So that's why this is a company, all you have to do is wait for the perfect storm to where you have a sell-off, a discounted price, your RSI, your other pivot points and trend lines all set up, that perfect storm. Then you step in and you take a position and you ride that rebound wave. And again, not to be cocky, but it usually seems that the Hershey play does work out more times than not. And you can see, look at this, throughout 21, 22, 23, the company was really off to the races, and then boom, they started to beat it up with that massive surge in cocoa prices, and it's understandable. But you can see for the most part, even though it's been tight, it has been slowly trending upward for the most part, and predominantly trying to hold and stay above and get back above that 200-day moving average. Which is why I'm saying we can potentially see another flash crash down to the very low 180s, but then chances are, just like here, you're going to start to see the chunk ups, and you're going to start to see the rebounds back above the moving averages, and of course, back near the resistance trend lines. But it has been down for a couple of weeks, so now the RSI on the weekly is down here at 43. It did go lower than that 30, but then technically over time, it did go on a pretty nice run back up to almost 210. So we may flash crash even lower, but then technically the rebound will, in theory, be even stronger. The one thing to watch is technically now after these big drops, we have the MACD crossing to the downside on the weekly, indicating bearish momentum, which is why I'm saying we may have another 1 or 2 down days. So we may be a little early here, but in my eyes, the rebound should really be coming soon. And let's check the pivot points real quick. I'll let you go. Okay. So yeah, these are wide on the weekly. A drop down to 150 would be ridiculous. We technically just broke below the 50-day moving average after we recently tried to get back above it. So this is why, again, in the immediate short term, like the next day or two, I can understand the argument for the bear case. and the stock may drop to 2, 3, 5 points. However, over the longer term, I do have to stick to my guns, and I see the bull case here. And even a retracement like it did here, back to like this 208 pivot point, very, very doable over the next month or two, in my opinion. Switching over to the daily, we can see we're right near this pivot point of 185.27. But then you can see, what's this level here? The previous, let's look at some previous pivot points here. About 182.27. So we can potentially, and even this previous pivot point back here, as you see, about 183 even. And again, the pullback to the trend line and the fib level is about 183. So again, technically, this is going back to a pivot point all the way back in February of 24. But what people forget is that this is why I like trend lines and I like looking at the pivot points, because once you extend them out, as we did, right? We started laying out the trend lines and then we just extended them out. And you can see that that's where you run into resistance in the future. That's where you'll have a bounce off that level, right? So sometimes I know it does get messy and it's a lot to look at, but when you extend out these trend lines, when you keep an eye on the pivot point, all of a sudden you'll notice 6, 8 months down the road, that's exactly where the stock stopped and then sold off. Or that's exactly where the stock bounced and found support and then started raging, right? So this is why even past information can come in handy in the present and in the future. But a pullback here to 178 in my eyes would be an overreaction. I'd be all over it like white on rice. But I basically stated my case. Let's not beat a dead horse here. And yeah, that's pretty much it. I'll end it there. So once again, this is Stocks by the Numbers. I want to thank you guys for Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. Thumbs up algorithm helps me get more eyes on the channel, obviously. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that these markets are rocky. They are volatile. They are very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thank you for your time. Enjoy your weekend.